All right, so today we are talking Financial Freedom 101, the tax benefits that employees never get. And we're doing it today with a very special guest, Patti Reece, who is a professional tax consultant as well as a Shaklee business leader. So she really understands this. So in this world, nothing can be said to be certain except death and taxes, which is by Benjamin Franklin. And I'm sure we've heard that quote multiple times. So while this statement might be as true today as it was more than 200 years ago, there are several ways to minimize your income tax legally through tax breaks and exemptions. What some might not be aware of is that network marketers have more tax breaks or tax benefit privileges than regular employees. So if you're someone who's only working at a job, there's not a lot of room for getting some extra back or even reducing how much you're going to be paying when it comes to tax season. So in this wealthy webinar, our guest speaker, Patti Reece, will discuss some of these tax benefits and how you can utilize or how you can use them. What you're going to learn today, you're going to learn about tax breaks that network marketers have that regular employees don't, what the qualified business income deduction is, how you can take advantage of tax breaks and deductions, plus so much more. And today it is presented by Patti Reece. So Patti Reece studied accounting at Mesa College, which is now Colorado Mesa University, in 1979. She began preparing taxes in 1989 and became an IRS enrolled agent back in 1997. She's a fellow to the National Tax Preparer Institute, a member of the National Association of Enrolled Agents, or the NAEA, and has been a Shaklee sales leader for 40 years. Patti has been using YFP for the past 3 years because of the flexibility it gives her, especially during the tax season. She's an incredibly busy woman, and having YFP tools gets to take a little bit off of her plate so she can focus for a few months. She loves helping people learn how to keep more of what they earn by saving on their taxes. So Patti, I'm going to pass it over to you. Welcome, and thank you so much for spending time with us and sharing this very valuable information.
Well, tonight's presentation is about tax breaks that network marketers have that regular employees don't. With the tax changes that came into play last year in 2018, there were the deductions that employees get are gone. Employees can no longer deduct anything that they have out of pocket, whether their employers reimburse them or not. So, as you can see, I work out of my home for both of my businesses, and you can deduct the cost associated with your home office if you meet the qualifications. Assuming that you qualify, you can deduct a portion of expenses related to your entire home, such as mortgage interest, depreciation, insurance, utilities, home repairs. So those are things you're spending anyway, and you can deduct a portion based on how large your home office space is. The space has to be used regularly and exclusively for business, and you can use it for administrative or management activities of the business. You can have another location for your business where you conduct incidental administrative or management activities, so you actually can still use your office and home if it's used regularly and exclusively. You can deduct ordinary business expenses such as accounting fees, advertising fees, license fees, and so on. And the tax advantage here is that many of your expenses may cross over between your home and your business. You can deduct your telephone, cleaning supplies, office supplies, audio and video equipment, furniture, and even office decorations that improve your workspace. If you like to travel like I do, and I travel almost every month of the year, and if your spouse likes to travel, If both of you are in the business, then your business travel deduction is a real advantage for networkers. Of course, you're going to have to make a clear allocation between the business-related purpose of the travel and the vacation portion. So for example, if we go to global conference and we go a couple days early, those couple days early, unless you're going for business, that might be personal. If you go a couple days early, like I did last year for the cruise and met with some of my distributors in Miami, then that was more business related. So there is a gray line, and you'll want to keep really good records relating to your network marketing business. Inside the U.S., all travel expenses are deductible when the trip is primarily for business, and when you're traveling abroad, you must divide the time between business and vacation time. Network marketing is a social business. Potentially everybody is a customer, and you have to eat and do it while you're recruiting or selling. So many of the meals that we have are business related. This is one of those expenses the IRS keeps whittling away at. However, your deductions are limited to 50% of your meal costs unless you're providing a meal for a presentation. I can give you more information on that if you'd like later. Beyond that, you have to have records. The key here is keep really good records to substantiate your meal deduction claims. In addition to the usual receipts, you should keep your expense deductions. You'll be able to document the substance of the business discussion, the business relationship, who you had a meal with, and the purpose of having the meal with your customer. The business discussion has to be during the activity or immediately preceding or following it. And advertising is one of the largest expenses you'll incur as a network marketer. Advertising can include magazines, newspapers, internet, and other ads used to market your business to others. And make sure you keep track of all advertising expenses during the year. Do you have friends and family who are also customers and business associates? A network marketer can convert any gift into a business gift, which is deductible. Now, under the IRS rules, you may deduct up to $25 for the cost of business gifts. So it's $25 per person per year. But if you're giving away things at booths as promotions, make sure you put those under promotions or advertising. Then you won't be limited to the $25 limitation. So this is the most exciting thing I've found in my tax practice in the last 35 years is the qualified business income deduction. Many owners of sole proprietorships, partnerships, S-corps, and some trusts and estates are eligible for a qualified business income deduction, or QBI, also called Section 199A, and this was in for years beginning after December 31st, 2017, so starting in tax year 2018. The deduction allows eligible taxpayers to deduct up to 20% of their qualified business income. Eligible taxpayers can claim it for the first time, like I said, in 2018, and on the 2018 federal income tax they file in 19. If you talk to our friends at the IRS, they'll tell you time and time again that the most important aspect of claiming your expenses and deductions is keeping adequate records. So make sure you keep really good records. The IRS suggests that you keep a separate bank account. This is what I always suggest to my customers, my clients. Make a record of all business transactions and retain your records. Record keeping and substantiation are particularly important for deductions for travel expenses and gift expenses. And the IRS will always tell you that a receipt is ordinarily the best evidence to prove the amount of expense. And Kristen, let's just stop there for a minute. I get a lot of people that will use their credit card logs for expenses. But let's say you go to Walmart a lot and you have a big Walmart bill. The reason that you want an actual receipt is because you can buy so many things at Walmart and you really have to break out those expenses. So the receipts are really important rather than just the credit card bills. Should you take advantages of the expenses and deductions in the Internal Revenue Code? Absolutely. The IRS will tell you that those expenses and deductions are there for you as long as you don't abuse them, but they're there for your advantages. If you're a serious network marketer, and in my opinion, everyone needs to have a side gig so that they can enjoy the tax benefits, these deductions can enrich your business and your personal lifestyle by keeping hundreds or thousands of dollars of after-tax savings in your bank account.
Awesome. Excellent. Thank you so much, Patti. And thank
No
you, everybody,
problem.
for joining. We do have some time. And before we go, do you want to answer a few questions? Because there are a few that popped up.
Sure,
Okay.
absolutely.
Let me just stop my share and then we can answer a few questions and then we'll be good to go. So
Okay.
one question I had is from Samantha, and she says, business travel meals are 100%, whereas other business and customer meetings are 50%. Is that correct?
No, opposite. When you're traveling or you're taking a client out for lunch or dinner, you only get to deduct 50%, but you need to report 100% on your taxes, and your tax professional or your tax program will take the 50%. However, there is a place to take the 100% of your meals. If you're doing a presentation and you're bringing in food and you're supplying food, then that's when you get to take 100%. So if you're doing an in-home presentation and you're supplying the meal, then you get 100%. I guess the IRS thinks that when you're going out to dinner, your portion's not deductible. So that's usually the reason that they have that. Now, if you're a DOT driver, truck driver, then you get 80% of your meals. So there's some other little things out there.
That's interesting. I didn't know that.
Well, my husband was a truck driver, so I knew that.
That's great. Another one that came up was, does this also work for renters? So if you're renting a home rather than owning a home, can you deduct a portion of your rent?
Absolutely. Your business percentage of your rent and your utilities is still deductible even when you are a renter. And you can either take the traditional office and home calculation, where you take a percentage of your home based on square footage in relation to the total square footage, or you can take the simplified method and take a specific price per square foot. And we can talk about that later.
Okay, that sounds great. Where is the other question? Now, there's one here from William. Now, William's asking if the IRS rules and the CRA, which is the Canada Revenue Agency, are the same, and I'll take that one.
Okay.
So William, there's a few things that, yes, will overlap as far as deductions are concerned. There are some differences in what they consider. I don't even know anymore if entertainment is allowed in Canada anymore. I know they took it out for the US.
Mm-hmm.
So there's a few things that you'll have to jump onto the CRA site and check with. But when it comes to the basics, like your mortgage, your interest on your mortgage, your hydro and everything like that, that's all the same. We'd have to double check on some of the other finer details.
Right. Yeah, I'm not real familiar with Canada, even though it was ironic. I had a dual citizen Canadian come in today, and they were
That's
asking me
cool.
some questions. So,
That's very cool. Another question that I saw in here that I thought was one we should do is, can I deduct my hair care? Can I take
no,
my hair care as a deduction?
no, you cannot. You cannot take your fingernails. You cannot take your eyelashes. You cannot take, as a matter of fact, you cannot take clothes that can be worn outside of your office. If it has a logo on it, if it's a uniform, something like that, you can take it. I've had to get a lot of people straight on this. I would love to deduct my wardrobe, but I can wear my wardrobe anywhere. So absolutely not. That is a misconception.
Thank you for clearing that one up too. So we'll take a couple more questions and then we'll move along. Let me see here. There was one that was about courses. So if you're taking courses and skilling up for your network marketing, would you be able to deduct those?
All of the training that we get in YFP, all of those type of trainings are deductible.
Excellent. Let me just go through. There's a few that are duplicates that came in after we asked some questions. Oh, here's a good one. Can your personal Shackley purchases count as advertising? So if it's product you're consuming.
This is the general rule for that. The very first time a new product comes out and you want to use it and try it out, yes. But you cannot constantly take off the all your products that you use. Just because we're all great advertisers in Shackley, but maybe the first time it comes out, and of course if you're giving away products and those type of things, but we would all have a huge deduction every month, wouldn't we?
Yes, we would. And when it comes to, there's certain products like the snack bars and stuff that are easy to give out as samples.
What I usually have people do for that is when you buy a box, rather than trying to keep track of one at a time, just allocate that box or that little thing of energy chews as samples, and then you can write that off. But otherwise you'll drive you crazy trying to keep track of individuals.
Yes, it will. And Mary asks, should we claim inventory?
Well, if you have inventory, you have to, on December 31st, you have to calculate how much is left, because you can't write off what you didn't sell. Mm-hmm. So if you look at how the cost of goods calculation is, then you put what your beginning inventory is plus your purchases minus what's left over at the end of the year, and you get a true cost of goods. So you don't have to claim it if you don't have it. And as you see, I have a little inventory, but I've been in Shackley for 40 years. I have a lot of spoiled customers that like to stop by and get stuff.
Yes. And you know what? It is nice to have some product on hand as well.
I have one of everything that I use personally. Mm-hmm. And if somebody needs to borrow it or pick it up, then I'll just order it and restock my shelf for me.
Yeah, no, that's perfect. And then Bobby asks, what is a QBI and what is not?
Qualified business income. Mm-hmm. That can kind of get a little bit confusing. If it's your main business and you're spending the bulk of your time in the qualified business, then you will be able to take that. Some rentals, if it's a passive income for you, but you're not in the business of renting. I have customers that have 20 rentals, and that's how they make their income. Those are qualified business income deductions for them. But I had a rental, and I barely did anything besides collect rent. So it was not a qualified business for me, and it's all based on how many hours you put into it. There are some additional things that you need to look at if you are a physician or a chiropractor and those type of things. And I can answer those outside of this.
Perfect. Excellent. Thank you. And then there was one about shipping, and I'm pretty sure we covered that last year. You can claim your shipping, right?
Oh, absolutely.
Yeah.
Mm-hmm.
So yes, you can use your shipping as a deductible. And then the last question that I'm going to cover is from Randall, talking about what about gifts in a BNI, so a business networking group, where you're giving, that you give to promote your business.
Sure. I would categorize those as advertising or promotions, and don't put them on your tax return as a gift, because then you're going to be limited to $25 per person per year. The same with realtors. I have about 20 realtors in my tax practice, and they give pretty substantial closing gifts sometimes. So those are not personal gifts. Those are business, more like advertising promotions for them.
Excellent. Excellent. I think that covers our questions. Otherwise, we can go on forever. There's a lot of questions in here.
Yeah. If anybody ever has a question, I'm not looking to expand my tax business, but I will definitely help you. If you want to message me or something, I can let you know.
Yep. And two, if you continue to have some questions in the Exploring the Opportunity group, this has been live streamed and you can ask your questions there. And then we can tag Patti in some of the questions too and get an answer if need be. So that's perfect. So thank you everybody so much for joining. If you were invited to this and want to learn more about possibly starting your own network marketing business to, one, create a side income, but two, be able to take advantage of these amazing tax benefits, get in touch with the person who invited you to the group or to this webinar, and they'd be happy to show you what we do and how you can get involved. And we look forward to seeing you all on our next webinar coming up next month. So take care, everybody. And Patti, thank you so much for spending the time and taking the time to share this amazing info with us.
Thank you, Kristen. And remember, everybody, it's not how much you earn, it's how much you keep.